Welcome back, everybody. It's Grant and Jarrett of the More Than Blockchain, and we are pumped to be talking about this quadrant, probably because this is the quadrant y'all have been waiting on. The last few weeks, we touched on Robert Kiyosaki's cash flow quadrant. Please check out the book. We'll put the link down below. Won't be an affiliate link. Just go click it and go check out the book because we have mad respect for this framework. And then we cover the employee quadrant, pros and cons, and how you can chase financial freedom as an employee. And as a business owner, sometimes you're like, I wish I could just be an employee again. The pros and cons of self-employment and how the skills you start to acquire as self-employed. And then last time we spoke about our experience as business owners. And last time we talked a little bit about being a business owner and some of our stories with that. Jarrett's foray in Guatemala as a business owner, my foray, thinking I was a business owner, realizing I was still self-employed and those sorts of things. So please go back and check out those episodes. So Jarrett, today we're talking about being an investor. What are you most excited about this quadrant for?
Well, I think this quadrant is where if you look at the cash flow quadrant, and we've kind of talked about this, that there's no shame about being an employee.
None.
You shouldn't have shame about any of the and if you're in one of the quadrants on the cash flow quadrant, because if you do it right, there's a way to find financial security, to find financial freedom, financial peace, whatever it is that you're looking for throughout the quadrant. But the investor quadrant, I think, is the quadrant that is most difficult to be in fully, to just live
Fully.
there the
Yes.
entire time, to
Yeah.
not touch the self-employed, to not touch the business owner, to not touch the employee quadrant. So
Yeah.
we have talked a lot on this show specifically, if you go back and look throughout the chapters, but obviously investing is a huge part because investing for me is much more than just putting capital away. It's much more than just choosing a stock or finding the right rental property or buying the right cryptocurrency at the right time or doing that. It's also investing in yourself. And I think all the people that I know that get to
Jarrett.
yeah, well, shout out Jay Harris, but all the people that I know that are, full-time investors and that's all they do, right? They have so much time to continue to learn and
Yeah.
to grow that
Yeah.
it's ridiculous because when you get into the investor quadrant and you can see it there, that is where your cash, your money is going to make more money.
Yeah.
That's it. You've built up enough economic energy that you can use that to just get more. And I think
Mm.
once you start on your journey, even if that's as simple as you're putting money away in a savings account in a bank, which I don't think you should do. And that is financial advice because over a long enough period of time, your money's going to devalue. But let's say you buy a stock, you buy Tesla and
Mm.
you wait 5 years. If you bought Tesla 5 years ago up until now, you're probably very happy with the return. And I think as an investor or as you step into the investor quadrant, even just buying that Tesla stock, once you see that your money can allow you to build more money with
Yeah.
little to no inputs,
Yeah.
it becomes a really dangerous thing.
Yeah.
And so that for me was something the second I saw it, I was like, oh, wait, oh, okay. All right. And then understanding compound interest. Once you understand compound interest and you understand that your money can work for you while you sleep, that's a really important thing. And I think as the quote goes that, if you what is it? There's a couple quotes. Those that work all day never have time to get rich. I love that one.
Oh,
Uh,
yeah, that's a good one.
yeah, and then the other one is that if you work, what is it? If you work all your waking hours, you'll never be able or if you no, if you don't make money while you sleep, you'll never be able to have a good rest or something like that. Which is another one, a
Interesting.
waste of way of saying that even if you bought that Tesla stock over the couple of years while you sleep, that money is making more money. It's
Yeah.
appreciating. That stock is appreciating if you were to turn it back into dollars or euros or yen or, whatever your currency is. So, I think the investor quadrant is the most difficult because it's probably the one that you're going to need all the other skills from the ESB, in my opinion,
Yeah.
to be able to get
Yes.
in there. In E, I think you need a lot of self discipline. You may need to, in the S, I think it's a lot of fight with the ego. You need the self discipline even increases. As a B, I'm not sure. I'm trying to think of like what, the skill you need. It's probably people managing or the people in
Mhm.
the process, as you talked about in the B conversation. You're
Mhm.
going to need all of those to be
Yeah.
able to be, I think, a really good investor. So,
Yeah.
anyways, I'll pass the mic back to you. But for you, how is it to be an investor, and where do you find the pros and the cons from this quadrant over maybe other quadrants?
Well, I'll say out of the gate, the pros are you could start as an investor from any of the other quadrants. You to be a business owner, I think you do have to be a good employee. And I think to be a good business owner, you do have to be a good employee and you do have to be a good self-employed. You have to cultivate those skills. But for an investor, you really don't need to be smart. You can, in theory, put money into an S&P 500, Vanguard 500 index fund. It used to be called VFINX. They've changed the ticker symbol since, which was my earliest success in investing. I didn't know anything. Every advisor, and I talked to multiple advisors, they all said, listen, the long-term play, you can retire a millionaire, air quotes, if you work a career for 20 years and put your money into a Vanguard 500 index fund and just let it compound. And generally, that's true. There's reasons that becomes not true, but generally, that's true. You don't have to be intelligent. You could be a self-employed and get more leverage. All the things we talked about, please go back and listen to the episode. You could apply those skills, create more juice for the squeeze, if you will, and accelerate that investorhood. But I think the best pro is something you said. And I personally would not say that in this context, investing in yourself isn't becoming an investor. I wouldn't say that, but I would say personally, because some of our friends talk about investing in themselves, and that's great. But you can only be an armchair quarterback so long before there's like if you look at the chart, they have small money dollars, money equals more money, like, read the other diagrams, time equals money, employees equal money. In this case, money equals money. You could put books there if it equated to taking action, but I know people who don't take action. And so, I wanna make sure that in the end, investing is literally putting money into something and getting some more money out, and that's actually a simple, stupid thing to do. The downsides are this: it's easy to lose money if you're not self-educating. That's the other side of what I was gonna say is if you're not self-educating, you're losing money. As I gave my anecdote in the first episode of how quickly I lost $1,600 on a stock options contract, and I basically didn't know the difference between a put and a call. It was the stupidest thing, but I should have, right? And so verbiage matters. Self-education does matter. And if you do work through the other quadrants, you will be a better, well-informed investor. But I would have one final caveat, and I'll hand the mic to you. I don't believe there is any such thing as passive income, actually. There is income that is more passive than employment, but I don't actually believe because in pure passive income, because you're gonna have to also know when to pull your money out or when to protect your downside or the questions to ask a partner if they're getting like the red flags. Like you mentioned MLM once, and I did a lot of MLMs in my 20s, a lot, like over 30. And I made some money in some of them, but what we did so many of them, we started to realize these are the questions you ask that can reveal red flags on whether or not that MLM is gonna go defunct. And that's true of any investment. I just looked at a private placement this week, and I hadn't looked at this level. This was a huge level. This was a nine-figure private placement, and I hadn't looked at anything that large before. But fortunately, I realized my self-education journey taught me some verbiage and it threw some red flags. So I think you threw out a few quotes. Here's my favorite quote from Warren Buffett. Rule number 1, don't lose money. It's obvious, but those are some pros and cons for me. Investments can be lots of things. We've got, in our case, mostly real estate. That's like the largest chunk of our investments. Our second largest is TradFi. Our third largest is DeFi, and we're trying to tilt that. We're trying to make it real estate DeFi, TradFi. And we're kind of in that process right now. But you made a good point, and I want you to expand on it if you could. It's actually really difficult to be an investor full time. Can you unpack that a little bit? I had a few thoughts of my own, but I want to hear what you were thinking when you said that.
Yeah, sure. I'll unpack that. And the thing I was saying is just that like all the people that I know that are more or less just strictly investors, sometimes they're business owners, is that they have extra time to be able to like once you get to the I column, then you have what you're talking about. You probably have time freedom, you probably have location freedom, and you probably have financial freedom. And because you have financial freedom and time freedom, you now have so much time to learn. So maybe you are just doing a stock day trader and you have $300,000 in your account and you know that you just need to get 1% daily because that's $3,000 and that's pretty good if you get that every day. So my point is that you'll have so much more time for personal investment, personal development to be able to learn more. If you
Yeah.
can be an investor for 25 minutes a day and that's all it takes, then you have what, 23 hours and 45 minutes to learn. So I just think it's also one of these
Mhm.
things too that once you get there, that time that you can compound being an investor and learning and growing, you just speed up that you don't have as
Yeah.
an employee, a self-employed person, or even a business owner. And what I was saying about being an investor, being solely an investor, because I know people that are almost there, but they find themselves in business owner because they start investing in a company. They go down and they buy a franchise, for example. So now they own the Dunkin' Donuts or the Smoothie King or whatever it is, whatever is being franchised out.
Yeah.
They own the Burger King or the McDonald's. They can probably sit back because the people and processes are in place. But every once in a while, they're going to have to stick their head in there and make sure everything is working. So I just
Yeah.
think as an
Yeah.
investor, even as a pure investor, it's not there are times where you may need to stick your head in and kind of be a business owner. Like I think Warren Buffett's of the world are really, really rare people that just have so much money that the money just makes money, right?
Sure.
Berkshire Hathaway and what he's done. So I guess that was kind of my point that of the people I know that are like 90% investor, every once in a while they have to go put on the, hey, I own this company. What is going on? Our quarterly profits are down or whatever it is. Like, I just need to go stick the head in. And I also think the pandemic changed things. All the investors saw the market go down. And so they saw their bags go down. And then all of a sudden there was a huge disruption on what we were doing. We used to have 7% in the United States was put into services, 7% was put into goods. Well, when the goods went down because no one could go to the mall. Sorry, the services went down because no one could go to the bar or the restaurant. The goods doubled.
Yeah.
So things change. So it's hard to always just be on the investor bench, I guess is my point. Like over a long
Very
enough period
hard.
of time. And I'm glad that you said that thing about the passive income. There is no such thing as passive income. There's such thing as some things that are more passive and some things that are less passive. If you are
Oh,
just
yeah.
working a 9 to 5 job, you are actively going to get your money because you're trading time for money. If you are a self-employed person, you're still trading your time for money. Yeah, it may be 2 hours what you could do in 8 hours as an employee. You're still trading time for money. If you are a business owner, you're definitely leveraging people there, but you need to be active in that managing of the people and the processes. The
Yeah.
investors where you get out and where you just see and you see on the quadrant, which is so great, little bills, big bags, right?
Big bags,
That
little bills. Yeah.
little bills, big bags. That's in theory how it should work. But still, even those people, as you're saying, you have to know what the market's doing. You
Yeah.
have to know if you're going to take out some money because you're going into a recession and you want to hold some cash on the side. You
Yeah.
have to know, hey, that guy's not going to be CEO anymore. They're going to get a new CEO. So the stock's going to drop 15% probably.
Yeah.
So let me sell and then I'll buy back in. These are these little things. So in many ways, an investor almost has to be more attuned to the macro, but can start
Yeah.
to forget about the micro and the people and the processes.
You raise a really good point. We could have touched on a lot of different aspects of these 4 quadrants. Some people might watch this series and ask, "Well, we didn't talk about the tax implications." Well, you didn't talk about time horizons. The time horizon for an employee is every 2 weeks. The time horizon for an employee is roughly every 4 to 6 weeks. For a business owner, it's quarterly or annually. For an investor, it's years and maybe decades. And Warren Buffett himself is a business owner. He is not an investor. He buys and trades, so we call him an investor.
It's true. It's true.
But if he keeled over dead, you'd watch the BRK stock, which is the Berkshire Hathaway stock, you'd watch it take a massive swing. He is a business owner, and this is the big debate about Berkshire Hathaway. They have to do their annual conference. He does newsletters. He actually still gets on a jet and assesses companies. He's just a highly leveraged business owner. And so I think you're right. I think someone doing pure investment is very hard to find. So hard. This is the easiest example I have for this. And I know we're going a little over, but I think this is important. For you just to pull 36,000 a year, which most people in America or in the West would say is brokies, right? For you to pull that passively, meaning you don't have to punch a clock for it, you need $1 million cash moolah in the bank pulling 3% a year. Go find an account with 3%. Good luck. And fighting inflation. On top of inflation, you're talking roughly 11 to 13%, depending on inflation that year. Go find an account. Now, if you have $1 million, chances are it's easier to find that account. But go find someone who has a pure $1 million. It's rarer than you think. I mean, I think we have something like 22 million millionaires in the United States, and that sounds like it's a lot of people. But how are they millionaires? Oftentimes it's net asset value on property. They don't have that on cash sitting in an account. This is why when people talk about billionaires, they talk about, I heard one person say that they think 9% of all adult males have yachts. And I was like, what? Like, I mean, it was one of these ridiculous, red pill videos. But my point is this: being a pure investor is exceptionally hard. It is generally a growth process. So it's generally a 20-year process, but it is the one everyone is daydreaming about when they daydream about being a truly digital nomad, because we have lived in the DR and we came back because we couldn't actually do the thing we said we could do. We built our web design company to be remote, and generally it is, but you didn't realize the hangups with the employees. I got to match their time zone. So maybe I could go down to Argentina or Chile or Colombia, but I really can't go to Europe. We went to Iceland, we were ahead, but, like, it's really, you still have to coordinate, and it's like, man, and being self-employed might be easy, but the thing about being self-employed is your network is your net worth, meaning the referrals you get and the people you run, it's still somewhat geographically related. And so when people daydream about being financially free, they are daydreaming, I believe, mostly about being an investor, and they're just putting other decorations on it. So we could have talked about a lot of things, but I think we can unpack these in more detail. I would love to hear from you and from everyone what we didn't touch on that you do want to hear more about, whether it's from the cash flow quadrant or things we touched on. Jared, any parting thoughts there or words?
I don't know. I think you're totally right. I mean, we could look at this quadrant, we could go through and talk about time leverage, leveraging time. We could go through and talk about, value-based pricing throughout all of these and cost, price, and value. We could go
Yeah.
through all of these and talk about taxes. We could go through all of these and talk about earning potential. We
Yeah.
could go through all of these and use your framework, which is time freedom, location freedom, and financial freedom.
Sure.
But I think one of the things that hopefully people have gotten out of this, and please go back, we'll have our initial intro to the cash flow quadrant, the E, the S, and the B. Here we are on the I. Go through and check them, check out all the episodes, please. And then let us know what we're missing and what directions we should go.
Yeah.
Because I think it's really important to hear from people on what they want to hear more on.
Yeah.
The story in my head is most people are in the E quadrant, or they have their foot in the E quadrant, as do I. They're definitely interested to get into the other quadrants. A lot of people in the United States, if you work for a company, you are in the E quadrant. You're also in the I quadrant because you have a 401k,
That's
or,
right.
or you
That's
set
right.
up a Roth IRA, or maybe you own your house, which we could talk one day about whether that's an investment, unless you're house hacking or however you're going to, leverage property to make money. But
Yeah.
please reach out to us. You'll find all the links below. And we put out videos every Friday. So check us out, fridayfinances.tv for more information. And we will see you in the next episode.
Thanks so much, everyone. We look forward to seeing you next time.